Hello, and thank you for joining me on another webcast brought to you by Nerd Enterprises Incorporated. Visit us on the web at www.nerdenterprises.com. We're happy to help. And what do we help you with? We help you figure out how to make your business more profitable by going through the core of your business, which is the accounting and bookkeeping. And of course, what frequently goes hand in hand with that is the IT side of things. Because all too often, not too often, but often enough, when you want to have your accounting system like QuickBooks set up on your network, you'll need IT services in order to make sure that that's done effectively and properly. So over time we've built in the IT, and we do a few other things that we've been asked about enough times to feel that it's worthwhile to do it as a service that we offer. But the primary focus of our business is on your accounting and bookkeeping to help you save money, free up your time, increase your output, increase efficiency, and of course enjoy life and what you do so much more because you're excited about it. Because anytime we're doing well at something, we're going to get excited about it. And what happens is you might know a lot about whatever it is that you sell or whatever service you provide, but you're not necessarily going to be an accountant. And the accounting, again, is the core of your business, and that's what we can help you with. So if you want help with that, visit us on the web at www.nerdenterprises.com or email us. Go to our contact page. There's a few email addresses there, or you can email me directly. Email Seth@nerdenterprises.com. And I wanted to do another webcast on inventory because it's been so popular. It's our most popular tutorial so far on YouTube. Is the one where I went over how to use our Excel template to track and update your inventory back in QuickBooks. So I want to go over another area of inventory. I want to actually talk about some of the basics of inventory and help bridge that gap for those of you who sell products between what's happening when you sell a product and how that impacts your financial statements in QuickBooks and how that impacts every aspect that it touches in QuickBooks, frankly. And I've got to do this in 10 minutes or less, so I'm going to have to be quick. And with that, I'm going to go and share my screen with you. And we'll bring you over to a QuickBooks View. It'll be so much fun. Now, when you're selling products, there's a few things that happen. I'm going to use the same template that I used the past couple weeks on the real estate example. I'm just going to add in some product-related stuff because I want to deal with a set of books that's got a fairly blank balance sheet and profit and loss, so it's really clear when you see the impact of what's going on. So, and that's really what I want to show you. I want to show you how, when you're selling a product, the different steps in the process and how it impacts the financial statements. Because a lot of people don't really understand this. And as a business owner, it's not that you need to have an accounting degree, but you should understand the impact on your financial statements. And I'm going to go over a few key points, basically 5 points. The first point is when you purchase inventory, what actually happens. A lot of people think, oh, I have an expense, I bought something. No. When I buy inventory, I've now acquired an asset. I own that thing. And I'm going to own it for the rest of my life unless I get out there and do some marketing and get it sold. So the assumption is not that it's an expense, especially if I purchase something for resale. The assumption is I now own it. It's in inventory, which is an asset, and assets go on your balance sheet. So that's going to show up here. So let's walk through what we do in QuickBooks when we acquire inventory. The simple version is, assuming we don't use purchase orders and all that, is we're just going to enter a bill. And let's say we go to Acme Products. And I'm going to skip over everything else for now. I want to take you right down to the Items tab because that's what's really important here. And I'm going to set up an item called the Who's a What's a Call It. And of course, QuickBooks recognizes it's not in the item list and wants to know if I want to add it now. And the answer is yes. I sure do. I add an inventory part called the Who's a What's a Call It. And I can copy and paste that into my descriptions here. And it's important to note that there's, again, we're going to go over the other 4 points is what happens when we sell the inventory. The first point is what happens when we purchase it. But quickly going over the setup, just know this for now. We need 3 accounts essentially associated with this item. I need to know what account to use when it comes time to expense it, when I've sold it. I need to know what account to use when I sell it in terms of recognizing the sale, and that's going to be an income account, which is on our profit and loss. So I create an account here called product sales. And since it's inventory, QuickBooks needs to know when I purchase it, as we're doing now, what asset account to put it to, where to put it on the balance sheet, in other words. Because that goes on the balance sheet and it's an inventory asset, which is an other current asset. Now again, I don't expect you to understand all the other current assets and all this stuff, but I do want you to understand how it impacts your financials. I'm purchasing the inventory. I do not have an expense yet. I now own that inventory. So let's finish the setup. Now the next thing we have to do, it takes us back into the bill entry screen, and it wants to know how many of these things did we buy. Let's say we bought 1,000 of them, and let's say they cost us $2 a piece. It wants to update the cost that I entered, the $2 a piece, permanently, and you should always do this, because what happens is QuickBooks average costs your inventory. So it's important to let QuickBooks know that this is the current price. It'll go back and update everything that remains in inventory to be reflected at that price, which could theoretically result in an overstatement of your inventory value, but over time it's going to average out. And that's really how you want to handle it, because most inventory systems you want to do a last in, first out basis anyway, and this is as close as you can get to accomplishing that in QuickBooks, is to just say, you know what, update all the costs of remaining inventory to reflect the current cost. And that's how we do it. It's also, by the way, when you do that, going to result in a lower profit on the books, which, depending on who you talk to, might be good or bad. It's bad in terms of the fact that it'll make you look less profitable, but it's good in terms of the fact that you won't pay as much taxes because you'll have less income. So if you want more on that, get with me privately. I'll do a full-length class on inventory and all the implications about showing profits and not showing profits and so on and so forth. But for now, the important thing here is that we've got an item. We've bought 1,000 of them. We paid $2 a piece for them for a total of $2,000, and now we're ready to look at what happened on the balance sheet. So going over to the balance sheet here, look what happened. I've now got $2,000 in inventory. And I also have accounts payable of $2,000, because that's the other side of it. I now owe Acme Products $2,000. Presumably I'm going to write them a check soon and pay that. Now the next thing I want to go over here, though, is what happens when I sell it. And here's the other 4 points, because when I sell something, 4 things happen. The first thing that happens is I have a sale. I now have to recognize gross income in terms of the total amount that I sold the items for. The second thing that happens is I have now, let's say, an accounts receivable, because now somebody's going to have to pay me for that item at some point in the future. That's point 2. Point 3 on the sale is now I have an expense. Now I've actually taken that inventory and I've sold it, so I have to show an expense in terms of the amount that I sold it and the cost. So if I sell 1,000 of these things now, and I sell them at $4 a piece, then, or I'm sorry, if I sell 500 of these things at $4 a piece, then it's going to be a cost of $1,000. So I have to show that, and it's going to come out of inventory, and that's the other point. So when I sell something, I have the sale, I have the receivable. Somebody owes me money. I reduce my inventory based on what I sold and the quantity at the cost, and that cost that comes out of inventory now goes into an expense. It basically shifts. So I no longer own that, now I've expensed it. So let's post an invoice and I'll illustrate for you. I just created a customer called Online Sales. I'm tabbing all the way through to the quantity. I'm going to sell 500 of them, and I'm selling my who's a what's a call it's, and I'm going to sell them at $4 a piece for a total of $2,000. Now notice also that's what we paid for all 1,000 of them. So by selling half of that amount, because we're doubling our money, we've now broken even. So I'm going to save this. We'll skip through the spell check. And now look what happens. I now have accounts receivable of $2,000 because that's what I sold. My inventory has now gone down from $2,000 to $1,000. Come over to the profit and loss. I have product sales of $2,000, and there's my cost of goods sold of $1,000. So that's what happens. My inventory shifted. $1,000 of inventory went over to cost of goods sold. That's at my cost. That's based on what I paid for the items. And what I sold them for is the sale, which is in product sales, and the other side, of course, is in your accounts receivable, right up here. So it's important to understand how this stuff flows when you're running a business, because then when you call me up and you say, I want to review my financial statements and I want to understand the financial position of my company, especially before I go to a bank for financing, I want to be able to answer their questions. That's when it becomes important for you to get an understanding about how this stuff works. And of course, I sit with clients frequently and I explain this sort of thing to them. So you can get a good head start on this sort of thing by watching a webcast like this. Then call me up and we'll go over your financial statements in more detail and make sure you can get that loan at the bank, or make sure that you're filing a return with accurate information if you filed an extension for this year. And there's lots of other things we can do with this information. If you watch the tax day webcast, which was the April 15th webcast, of course, then you also learned how to update this stuff. And I think I even talked a little bit in that webcast about how, and you'll see it actually, how you can really analyze your product lines using my Excel template in order to determine how profitable each product line is. And it's based on a report that's run in QuickBooks, but you can't go all the way. So we take it into Excel, and we use Excel to calculate the gross profit for each line item. Anyway, I hope you enjoyed this. I hope you have a great week, and look for another great webcast next